Good evening and welcome back to Be Rich. Today, the Indian markets made a recovery of 100 points, temporarily though, because its biggest refiner, Reliance, went up 3%. So, what is the mystery behind Reliance stock soaring so much? The answer is simple. Reliance is buying Russian oil at 50% discount, refinery in Jamnagar, Gujarat, and exporting diesel and petrol at full prices. Russia's oil imports before the war started was 5 million barrels per day. And since the war has started, its shipment has dropped to 4 million barrels a month. What is expected to create more problems for the Russians is not the ban on Russian crude that EU recently imposed. It has given an exemption to Slovakia and Hungary, saying that oils through pipelines can continue. The ban work out in a very phased manner, and over a period of time 90% of Russia's oil exports will get hurt. But that is not the real punch. The real punch is in the fine details that nobody has yet read. What it says is European insurers will not be allowed to insure Russian crude on European ships. Most of the ships that carry Russian oil to India are European ships. These ships rely on European insurers to take insurance. So, in international trade, if there is no insurance on crude being carried from Russia to India, the possibility of crude coming in stops. Therefore, that is going to bite more. The European nations have already pivoted and are now buying crude from America and Africa. And this is what has sent crude soaring to $124 a barrel Brent. Also, the fact that China has given up on its zero COVID strategy and has decided to open the market. This opening of the market has again put pressure on commodity prices, which means that crude is going up all the time. In crude, which is a commodity mainly available in the US, Canada, parts of Africa, Southeast Asia, and Western Asia. The rest of the world is dependent on crude, and crude can make or destroy an economy. If India were reliant, self sufficient on crude, then India's surplus, trade surplus, would be in 3 to 4%. Oil and gold remain India's greatest imports and has kept India's rupee under pressure. So, not only India, like what has already happened in Sri Lanka, Pakistan, and Turkey, more nations will be affected. They have very little forex, they have forex debt which they need to pay in dollars, and the more little bit of forex they have is basically used to import precious crude and food. As this become more and more costlier, the pressure on their currency increases. There is a negative feedback loop in the sense as currency depreciates, inflation increases further. India, which has a large foreign capital base, has been slowly selling its dollars to keep the rupee afloat. In spite of selling more than $50 billion, the rupee is trading at 77.71, the lowest it has traded ever. This means that more the rupee has depreciated more than 2 to 2.5% in a month. This means imports are going to get costlier, petrol and diesel are costlier, edible oil is going to get costlier, and all this is putting pressure on the country. The government, under pressure, has cut a portion of its usurious tax on fuel, but still, that is not enough because crude has rallied $10 from there. The final quarter's results of all Indian oil refiners, which are state owned, clearly show that the toll is coming on these oil refiners. Basically, they are selling petrol and diesel at a loss. They are also selling cooking gas at a loss. But the government is caught between the hard rock and the deep sea. It cannot make a decision to increase prices further because any further rises in LPG will dampen demand. Already, the lower middle classes of India have stopped using the gas cylinders and moved back to kerosene and wood because it's not possible to buy fuel at 1000 rupees a cylinder. Commercial cylinders cost much more than 2000 rupees a cylinder, which means cost of food at restaurants are going to go up. This is a relatively better run economy, that is India. Imagine what is happening in Sri Lanka. In Sri Lanka, there are enough ships with crude waiting to deliver the oil containers to its refineries. The Sri Lankan government does not have enough dollars to pay, clear the consignment, and bring it into their country. And the Sri Lankan rupee has already depreciated more than 30% this year. As every passing day goes, the Sri Lankan rupee is continuing on its free fall, which means there is a black market element on fuel, and there is also the legitimate cost of fuel is going up, which makes it extremely difficult. This problem is not based only on Turkey, Pakistan, and Sri Lanka. The World Bank says there are 117 countries in the world which have dollar denominated debt. As the mighty dollar gets stronger and stronger, more money is moving from the emerging markets into dollar. This makes servicing of debt costly. This also means bringing in crude and other fuel costly. And since Ukraine, as I have said several times, Ukraine and Russia are the breadbasket of the world, buying wheat is also becoming costly, and therefore countries are struggling with wheat prices. India, which boldly said it would contribute to the world's wheat by exporting, within 10 days of sending delegations across the world, has banned export of wheat because domestic prices of wheat began to rise as millions of tons started moving out of India to the rest of the world. Indeed, the world is going to go through a difficult time with costlier fuel, costlier food, and a lot of debt default. The Ukrainian Russian conflict is having a lot of unintended consequences. The most important consequence will be rising federal rates, which will be very bad for the markets. Thank you for watching. Be rich. If you like the content, kindly do not forget to subscribe to my channel and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. And don't forget to share this content with your friends and relatives. Once again, I thank you for your support to Be Rich. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.